The following is a presentation of TFNN. The Global Market Pulse. With your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. It is Thursday morning here. Tomorrow's my birthday. I'm not forgetting that. Getting older. Not feeling it. Hey, we had some big moves here in the S&P. And that's no mystery to anyone. And the market seemed to like the gentle verbiage from Janet Yellen. And you know what? At some point, they've got to have a little prudence about the whole thing. I mean, they're going to shock the mess out of people when they start having to really raise these rates forcibly. So, again, to use Greenspan's irrational exuberance, I mean, it's almost, I think people are getting to that stage because they think the Fed's just always going to take care of them, and making the market go up is possibly the most important thing in the world. It's actually not. The most important thing in the world is to try to keep the economy stable, and they may be at some point causing at some point down the road for this to be a little bit unstable, but we'll see how the experiment pans out. I may be wrong. So we will take a look at the S&Ps. As the action happened off this 1968 area we talked about yesterday. We did the free video yesterday about, if you go back and probably got another free video up today already because I know I've already done one, but we had the free video on the TFNN site about, we called it Custer's Last Stand for the S&Ps around 1968, and I want to kind of show you how and why that happened like it did. Here's the 240-minute chart, and there's that kind of pre-market area. I think we reached a low of 68.25. There it is, and I think we were talking around that time. I think we were trading a little bit higher than that, maybe I want to say 70, 72, 75. But we talked about that 68 area being really, really important because the previous day we had a little noise below there, and the breadth had still stayed positive, the breadth being this weekly breadth here, still hanging in there. And we had got some really good trading done on the daily breadth being negative from some daily inflection points that were around on the March contract 2052. So we got some short signals around the 2052 area on the dailies, and we went back and retested those. And not to be a Monday morning quarterback, but the 68 area was the target for that, and that was the area to kind of accumulate, possibly not back the truck up, but just accumulate some contracts down there, put your stops relative to the 68 area, and be able to utilize the breadth still being positive in a possible bounce situation. And, I got to tell you, in all honesty, considering that, the Fed's job, it seems at this point, is to not upset the market. I mean, what was really the percentages that this was going to happen in an opposite manner of what she said, which was, we're basically going to take, treat this with kid gloves and blah, blah, blah. I mean, what was she going to say? No, we're going to have a heavy-handed raise-and rate kind of attitude moving forward. I mean, there's like zero possibility that was going to actually be said. So therefore, her trying to appease the marketplace, and that's okay. I mean, my 88-year-old mother's got money in the stock market. I mean, I hope everybody wins, but the jargon that she used was probably 100% chance that was going to be the dialogue she was going to use, and therefore the 68 area was going to probably be something you could utilize from the long side, at least temporarily. So here's where we're at this morning, 2030 right now. We've been as high as, I think, 2036 or so. Let me see. 2036, yeah. So again, here's the situation on the dailies. So the inflection points that we knew we were going to have, because we had this big orange bar yesterday, we knew we were going to have a new profile appear. Those inflection points, 1972 now in the March contract, and right at 2026. And I'll tell you how you can easily get these numbers is go into the scanner. I've got the futures up and the currencies as I chose these. And I'm going to go over here to the S&P minis, and there's the two numbers I just spoke of, 1972.40 and 2026.90. So as I mouse over that daily sell, it's going to give me that whether I want it or not. But it's also going to keep in mind I've still got these inflection points sitting down here, 1968.37, rounded off 25, and 2071 up top. So, how do we deal with this now? I'll tell you what's happening, and I'm going to kind of go into this situation. I'm going to show you something really neat. I hope it's neat. I'm going to deselect all that. I'm going to show the S&P 500. And as that populates, just read this. My task scanner is shaking from all the action. I just read that. That's funny. Let's take a look at this. Let's do this. We've got the S&P 500 loaded up here. We've got a ton of stocks, right? And we always talk about this too. We always talk about one of the indicators in itself is a new profile attempting to appear. It could be, bearish if it's appearing on top, or bullish as it's appearing below. So most of the profiles, I'm going to go to our daily here, and I'm going to say, what is new box appearing? And I'm going to show matching results only. And we're going to get a little refresh here. And that's going to happen in seconds. And there we go. So let's just take a look at this. So these are the S&P 500s with matching results only, showing daily. And this yellow cell is new box attempting to appear. And my goodness, that is a lot of stocks with new profiles attempting to appear, more than likely on the bottom here. That's an indicator in itself. And this daily breadth is probably going to flip to positive, because these new profiles are going to appear on our database for a lot of individual stocks. And that new profile appeared already in the S&Ps, because this trades a little bit, differently than the stocks. The markets open at different times, or a lot more often, put it that way. So as we wait for these, and let me just go to a stock where we have a new profile attempting to appear. Let's just pull up Alcoa, okay? So let's go to Alcoa AA. Let me just show you how this works. And here we go. So we had the closing bar yesterday, and when we have some opening prints today, trades going off, pre-market, we will have a new set of inflection points, and that in itself is going to be new supply or new demand appearing down below. I didn't say that right. New demand appearing down below. So that in itself is relatively bullish. And now on my admin terminal, I noticed there's about 37% of the S&P stocks that are having new profiles appear internally. That's ungodly a large amount of stocks with a new profile appearing, which will flip around some of our breadth here as soon as the market opens. And I've never seen that amount of profiles appearing at one time. That's just truly amazing. So that in itself, just to sum up the S&P talk, is going to be a relatively bullish situation, but the inflection points that we pay attention to right now in the index itself, again, are 2027 rounded off and 1972 rounded off, and that was actually the two numbers we talked about in the scanner earlier. So quite a situation there for the S&Ps. That is how many points is that? 60? Let's see. Let's just call it 60 to 40. Let's conservatively 70 points in 24 hours. Amazing. I think some people have gotten caught up in this Cuba thing. That's a long-term possibility play on any companies that might have any ways to make money in Cuba, and that is, in addition to it being a long-term play, is an extremely unknown play. because this is not the first time that one of our administration type moves has tried to, do some things to mitigate that circumstance. And, I think so far they've come out a winner. They got a couple of political prisoners back or whatever, but that is so far out in the ether of even remotely affecting the U.S. stock market. I hope some of the people that are going long right now are not banking on that as some way to increase our GDP significantly. So, sit tight on that one. Yeah, exactly. I don't know if anybody's ever been to Cuba that's watching the show, but there's ways to get in there. You got to go to another country and kind of fly in there. We'll talk about that on another show, on our on our non-trading show. Okay, so the euro, we talked a little bit about this on Tom's show yesterday. That 125.74 area, bottom of the box in the weekly, this was a complete gift. We were just hoping the market would come to us on a trade like this, and we hit it. And then what do? You gotta say, okay, well, I'm at my high probability area to get into some of this, and then when we get down below, this is our daily, get down below the 125.07 area for confirmation that you're definitely considering yourself on the right side of the marketplace. You got some targets down below you can kind of gear towards at that stage, and those 122.73 areas have been met. We actually did the free video today on the TFNN site on this euro. You might want to take a look at it. Right now, I think you got to kind of wait and see on this one. It's something where you've had about a over 200 pip move really quick. And thanks, Chapman. And you can't look a gift horse in the mouth on this one. I mean, that's a pretty big move for a currency, and this may go lower. But you know what? We'd want to see a daily close below daily profiles here, in my opinion, to really get some leverage on it. And then hopefully we'd have a retest and resistance kind of sell of that 122.73 area on the euro. So obviously this is being affected by the U.S. stock market, the ability that the Fed has now to gently, on an as-needed basis, which God knows what's it going to take for them to raise rates, with the economic numbers we've had coming out. But that is pretty currency in inflammatory right there. And our currency right now is we're going to take a look at that after the break, which is also driving the euro down. But we've got something to contend with here. The dollar does. We've hit a target this morning, and we're going to talk about that a little bit more when we come back from break. So stay tuned, and we will pick it back up as soon as TNN gets through their commercials here. We'll be right back, folks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the show. Got the dollar up right now. Unfair highs, just to kind of give you some numbers here, 88.73. Excuse me, that's not the unfair highs. Sit tight, guys. 89.61 unfair highs. We hit that. Let's see, where were the highs this morning? 89.59.5, rounded off 89.60. So we hit those top of the box highs, 89.61 rounded off by, what, a pip or you say pip? Ticks. Dollar would be ticks. I'm sorry. So dollar index is not a currency. Here we go. So that hit it almost to the tick. I just call that satisfied. But remember, guys, we need to look at the close situation here. And, I think we've met some targets. We crossed some borders down below yesterday with the Fed. With the Fed talking about the possibility of raising rates, which is, making the currency a little bit more valued in general. But, this is a great shot. Nice move. Again, like the euro, wouldn't look a gift horse in the, I don't know what that saying means, gift horse in the mouth. Maybe somebody can explain that to me in the den. I'm from North Carolina. There's a bunch of kooky sayings around here, but that one we haven't looked into it far enough. But anyway, that's the dollar situation. I want to take a look at this Aussie one more time here. Getting a little bit of movement back on the Aussie, but I think we've satisfied the move down. We always talk about the 240s regulating the thing, but look at looky here, as they also say around here. That unfair low, 82.04, we've kind of gotten back up into there. And again, we're in a downtrend, and you're always trying to eliminate one side of the marketplace. And the way I do it is I use the scanner to regulate, to give me great ideas and inflection points. The breadth when I'm trading stocks to try to eliminate the one side of the marketplace for me a lot of times. But I also use those long-term trends to try to say, you know what, do I want to trade against the probabilities and do contra trades in a very short-term manner where I know that's not an extended situation, most likely? For instance, like on the Australian dollar, do I want to trade against the long-term trend? There's money to be made in situations like that. But the higher probability situation really is to, understand that we're below profiles on a long-term and intermediate-term basis, and I'm probably looking until, I'm looking to turn the rents the same way all the way down until I'm told differently with some technical damage. So this is an instance of this, same magnitude. We may be wrong, but we've gotten a rally back up into an inflection point, being this 82.04 area, and we may cross that border. And the technical damage, in my opinion, is going to have, saying uncle completely more than likely is above this 82.40 area. So again, you got a leverage point there. Long-term trends down. We're looking to stick with that as long as we can, and that's the way the Australian dollar ball bounces. Got to look at the yen because, this has got some dollar hair on it. The yen's kind of gotten back above where we wanted it to, and I want you to look at the action. This is, again, kind of a primer and education here. We got the close back up into profiles, and it's not okay to be short anymore if you were playing that game. I was not a big fan of going short this ever, the yen, until some kind of government policy change. But now it's kind of okay to get your toe back in the water on the long side. And lo and behold, look what happened. We came back and pretty much retested that border crossing area. And I think we could move higher because I don't feel like the dollar is actually going to stop here, even though we've reached that inflection point. And therefore, we've got to sit tight and just kind of wait and see what happens on the closes on those situations. Sorry about that, guys. Had a little mosquito flying around here. So that's the situation on the yen. We want to take a look at some other things that are really affecting the marketplace right now. We looked at crude oil. This is the January contract. Just make sure I got the right thing. Okay. Yeah, and yesterday, even though we're in a downtrend, this is relatively bearish, guys. Profile appearing above price action, locking in, and that's what was predicted yesterday. But this is always relatively bearish when you're significantly below a profile or above a profile when they appear. That's a bearish sign in itself. When we come back from break, we're going to get into the 240s and what's going on here and how to regulate this trade, hopefully down even farther, even though we're pretty far in the hole in crude already. We'll be right back, folks.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
If you're an active trader looking for that extra extra edge when it comes to trading and investments? Then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi guys, welcome back to the show. Here's January crude on the 240s we talked about yesterday. Again, by definition, we're in a downtrend. We had a new daily box appear. Thank you very much. Getting some coffee here so I can wake up a little bit better. Had a new box appear, a new profile appear on the daily as of this morning, and that was predicted by the orange bar like that on the daily that had happened. But again, intraday yesterday, since we're in a downtrend, we're looking for breakdowns below profiles or being able to sell resistance points if they don't work out here, just like that one didn't. And I mean, we're pretty far in the hole, but we come into another high probability significant area around that, 58.73 area. And again, this is just put right to you in the scanner. Came off there about $3 a barrel. Kind of been bouncing around, staying within the 240 balanced areas. Remember, we call these balanced areas, and when we get outside of these, it's an imbalanced marketplace, and prices, in theory, should move relatively quick. It's like that bell curve scenario, and you got these outlier data pieces that are just kind of all over the place, and that's kind of the concept here, that bell curve situation. So here's the daily situation on crude. Here's the 60.77 area sitting here on the daily, but I don't really expect that to be hit. But if we breach this, 58, 59, excuse me, let's just point out the numbers again. Let's just say rounded off 59 neighborhood. You're going to have, in my opinion, as a trader, you're going to have to say, you know what? Why am I in this trade still on the short side? Maybe I can wait for a better inflection point, being the 60-77 area on the daily, to maybe put some more weight on the short side. If that doesn't work out, we've got 64.36 above. But the concept lose a little, make a lot always stays in force as a trader. And a lot of times, even if you kind of get in this little DMZ up here above 59 to 60, what was that number? 60, 70 something, 60, 77. You can always get back into the short trade below this area. And I'm being pretty, damningly short here on crude oil. Because the long-term trend is down. And, again, sticking with what we talked about before, letting the 240s regulate the trade down and using inflection points on the short side until we're told differently in a situation like this. We've had some really trending markets lately in some of these commodities and indices, and the S&Ps being one of them, the crude oil being one of them, the euro being one of them, the British pound, the yen. Really nice trending markets. And a lot of times there's big organizations, the JP Morgans of the world, that have 10 PhDs sitting in a row, and they're getting information from them all day long, and they're trying to figure out how to there's a finite amount of money being able to be taken out of the marketplace, and most of the time they're taking it from or trying to take it from smaller traders. And once that trend is identified, a lot of traders will just usually get shaken out of the market or whatever, because then the pattern may change, and they will try to take advantage of people in those patterns, those classical technical analysis patterns, and they've got the money to throw around to step on the gas pedal to move things away from those patterns, at least sometimes temporarily, if not permanently. So that being said, it's been interesting how these trends have just been very docile in their patterns and staying with these trends without a lot of volatility, which is kind of amazing. That we haven't herky-jerked around here and shaken some people out every once in a while. This has been a pretty smooth, orderly exit, if you will, on crude oil. And I probably said too much about that, so I'll stop. Here we go. Let's take a look at the treasuries, because we have to. This is something that I've, just, again, staying with the long-term trend up and trying to trade treasuries from the long side only has worked out very well. The tone, who knows what those guys are going to do at the Fed. If they, see maybe 0.1% decrease in employment, or increase in unemployment, I should say, because the real employment numbers, as we know, are nowhere near the numbers that they come out with, but that's a whole nother show. They may actually use that guarded attitude of, oh my God, we can't raise rates now. We just downticked a tenth of a percentage point, or upticked a tenth of a percentage point on the unemployment rate. So with the concept of rising rates on the horizon, if that's true, these treasuries should be a lot lower. And I'm looking at this as we had a bounce point right here on the dailies, 126.30, basically 127, and we were in that same general area on the weeklies, 127 neighborhood. We breached all of that, not too much here. It's just incredible that we have not breached it more than that. But I'm still looking for, if we get a weekly close above that 127 area, I think you got to still try to go long treasuries on support. If we get closes down here in the fair auction, by the way, I think you just need to sit on your hands for a little bit. You got another inflection point down below at 126.06 on the long side, and then any closes below there are going to start showing some cracks in the armor and some possible technical damage. And we may end up at that point seeing 124.26. I've thrown out a lot of numbers to you. I'm aware of that, but I think you just need to know the lay of the land. And when you come into the scanner world, all those numbers are available. I was going to show you something really quick here. Let me just do this. Let me go back to futures. Let me clear the deck. Let me pull up futures. And I'm going to go into the 10-year and the 30-year. So as I mouse over these, you've got those inflection points we just spoke of. There's 30-year, there's 10-year, and those are the numbers. Quick and easy, boom, here's the landscape view. Just putting all the profiles into order for you, weekly, daily, 240, 60, so you can see this and the level of the market as we see it right now. Again, this is real time, and these cells change real time, and we're going to be adding more and more markets. And let me tell you something really cool that's coming up. For portfolio managers, we're actually putting in a feature into the breadth calculations where they're going to be able to put in their own portfolios. If they've got 142 stocks that they're trading, most of them are always trading them from the long side because their charter won't allow them to go short of what people signed up for in their company. And they'll be able to see breadth positive or breadth negative and see a heat map of their instruments relative to profiles, and that'll allow them to use the stocks that they're in relative to the market, the index that I guess closely patterns their portfolio to see if their portfolio is underperforming or outperforming the index or the sector relative to profiles. And it's kind of a neat concept that I'm really, really jacked up about because again, I don't think people have looked at the markets the way we're trying to put it into perspective right now. So, and a lot of institutions are signing up ahead of time for those features. So, something else that the breadth is going to be really cool when it comes to identifying some things in a way that they've never had identified for them from a portfolio standpoint. And if you're sitting around with a ton of stocks, maybe we could do the same thing for you guys. But again, it's the more you have in a breadth calculation, the smoother the end data is going to be for you. Just like if you have a three-piece data set versus a 300-piece data set, you're going to be able to get a lot more valid information by a larger sample in statistics in general. So if that makes any sense whatsoever. So I'm going to pull the scanner up, and I'm going to do something else here with it. I'm going to go in here, and I'm going to deselect everything, and I'm going to go back to the S&P 500 S&P 500 internals. I haven't been looking at the den here. Anybody asking? Oh, by the way, I don't say this probably once a month, but if you guys in the den or anybody out there wants to call or ask for something to be looked at on the screen here, I'll be more than happy and ecstatic to do so. So feel free to give me something every once in a while there to look at for you. Okay, so what I did is I pulled up the S&P 500 stocks again in the scanner. It got every cell, every time frame. Got a lot of those yellow indications of a new box forming on the dailies, and we're going to see that breadth probably flip over here. But what I wanted to do is I wanted to go in here while we've got the S&P 500 up, and I wanted to look at what is trading weekly bottoms. Boom. And what that's going to do is going to put some stocks out of the S&Ps that are sitting at the bottom of their weekly profiles. Now, to put that into perspective, let's go back into the S&Ps here really quick. Let's pull up the March contract. There's our weekly unfair lows we bounced off of at 68, and you know where we're at now. So we're right in the middle of a fair auction there. We're coming up into the daily unfair lows around 52. Don't have to get there, just kind of stating some things for you. And what I wanted to see was, what here really is not looking like very good long candidates, all right, because these are things that are basically not cooperating too well with the latest move up, and we can kind of identify 240s and dailies and keep stripping it out. But let's look at ZTS, all right? And I'm blindly pulling these up. I did not rehearse this part of the show today. So ZTS, I'm just going to pull that up because it's looking like something that may have an opportunity here. We don't know yet. Let's just take a look at it. Let's drill down into it, and let's just kind of see where we've been here. And here's, this has been a relatively strong stock, but the scanner is saying basically right now that we're starting to get imbalanced on the downside. Pre-market looks like, don't know how valid this is, 41.13, and the daily information here, and I'm going to just pull up ZTS again. Here's the inflection points, 44.98 top, 43.72 on the daily. So this 43.72 right here, again, was that, kind of starting to show some cracks and technical damage on the downside. But what do we do now? So the reason I'm looking at this is because I'm trying to find high probability trading opportunities, and what I'm seeing is, even though this thing hasn't really cooperated, yesterday with a real big snapback rally, I feel like it's been a strong stock, obviously, without question, lately, and we've had a decent little pullback with the market in the past week or so, and now we're at an inflection point. So what I'm thinking on this is, I'm going to use this inflection point, 41.27. We're trading 41 and some change right now, but 41.27 weekly unfair lows. New box appeared this week, new profile, new supply, and we're at the bottom of that meaty part of the bell curve. I'm looking to take a shot on this on the long side, believe it or not, even though we didn't have any cooperation on the snapback rally, which was kind of weird yesterday. ZTS may be able to provide a good long opportunity with stops down below 41.27, the way I see it, just looking at the history of the stock. And again, I didn't need to look at the charts too much because I've got all that information right here. And considering that the breadth is starting to change positive, all that may drag this up. Okay, so again, stops can be oriented around that particular inflection point, and again, it's using the scanner to try to pick out things that you might have otherwise not looked at. Let's take a look at General Electric really quick, GE, because we've got a bottom here, and we've also got a new profile appearing on our daily. That's what that means. So let's take a look at GE. Okay. All right, so here we are. Unfair lows 24.77. We knew that ahead of time. 24.77 right there, as you can see it. New box attempting to appear, new demand down below. So considering that, we had a little cooperation with the bounce yesterday. G's kind of been getting hit a little bit lately, but we've got a new box that will appear today, new inflection points on G. Those will be given in the scanner right there, new set of inflection points. And you're sitting at weekly unfair lows basically in the same neighborhood. Remember, it's going to tell you when you're near there with a 10% variance based on the height of the profile. But if we can get back above 24.77, get that new demand area down below, G might not be a bad long opportunity, even though it hasn't acted extremely well lately. But again, that's something to put on the radar screen. Guys, we're going to be right back after this next break for 5 minutes. I'm going to answer a couple of questions, and look forward to seeing you in a few minutes.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN has just announced a special sale for the Gold Report for a limited time only. To celebrate the 660th weekly issue of Tom O'Brien's Gold Report, that's more than 12 years, TFNN is having a special one-time sale. Right now, you can receive 60 weeks of the Gold Report. That's 14 months for only $600. We're offering Tom O'Brien's dynamic weekly newsletter at only $10 a week, half off the regular monthly price. By taking advantage of this special offer, you also get a signed copy of Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, an $88 value. The Gold Report is published every Tuesday and provides subscribers with Tom O'Brien's expert commentary on the industry, as well as detailed information on a variety of mining equities. This offer is valid for current or new subscribers, but is only good through this week and ends this Sunday, December 21st. Lock in the low rate of only $10 a week for the Gold Report by placing your order at the front page of TFNN.com today. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Hey guys, welcome back to the show. Got about 4 minutes here. Scanner, just looking at the same filter. I was looking at KSS and I was looking at Kohl's Corp because the low profiles daily sitting at the weekly, even though we had a pretty good snapback rally, so I have that up. Weekly situation, wow, there's the inflection point, and that is 57.83, and 57.83 is very similar to 58.05, so you got a kind of a DMZ there, a lid, as you can see. We haven't been able to get through there, and lo and behold, we're sitting basically below both profiles, and that's where you can orient stops around, and that's why I love this thing, because it allows me to say uncle in a very well-defined logical area. So let's do another filter here really quick. I'm just going to clear the sorting, and I'm going to go in here daily, and I'm just going to look at what's trading below the box at the S&P 500, and don't have many candidates left. Amazingly so. Okay, because we've got a lot of new boxes appearing, and even though this is sitting here like this, we're going to have some flip over in that particular meter, and I'm just going to come in here and look at AXP, top of the box, bottom, blah, blah, blah. So let's pull up AXP, and again, looking for trading opportunities and areas that I can leverage against some multi-time frame lineups here. So again, here we go. little bit of a snapback rally in this, trading about 90.41 pre-market. It looks like 91 maybe, something like that. Okay, so American Express, bottom of the box sitting here, a little bit higher than that right now, pre-market. Here's the situation on the weekly, 90.68, and by the way, that's provided in the scanner, so I'm just going to pull it up to verify it really quick, and there is American Express, 90.50 and 90.68. So again, this is the kind of thing that's a little scary. I don't like this from the short side, just because I think the broad market's probably going to climb a little bit, even still after this crazy move up. But again, I think there's better short candidates. I was just kind of perusing around, and this is something that was just on the radar screen by the scanner in a not very well-defined manner. But if I want to pick out complete imploding pieces of crap, this is what I'm going to do. I'm going to go in here, and I'm going to choose weekly and 240, and it's going to pick those out for me. And by the way, these are your two candidates. We already looked at ZTS, MDLZ. All right, so these are the things that are just not very good longs. MDLZ. Boom. And here we go. So got all the inflection points ahead of time. Here's the situation on MDLZ, weekly, daily, 240s and 60s, and this is something at least you can say, I don't want to be long this thing right now. We're going to have to head off the air in just a little bit, folks. There's a lot of different ways to use that scanner. The breadth is actually still positive on the long term. I am probably going to do the next hour for Steve Rhodes. I think I'm supposed to do that, so if you want to hang around or not, if you've had enough of me, I understand completely and fully. But we'll probably have Tom on there with me, and we'll be able to talk about a couple of things together that I hope you'll enjoy. And then Tom will be starting at 10 on Steve's second segment. He's out for today. He's got unforeseen circumstances, so hang around if you want to. We'd love to have you. Be back a little later, guys. Thank you.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.